All right, we're live. It is nighttime, middle of the night on Tuesday, and we got a big day tomorrow. Let's start out by zooming out on the S&P. So obviously we have the Fed meeting tomorrow and the Powell presser. I just want to start with the quarterly view. So again, what are we up since 2009? If you take the bottom, we're up like 600% roughly. Okay, that's interesting. What about okay, this is a sell tail, right? So if we close below 4,400, we've got a double quarterly sell tail. That would be bearish. Monthly, zoom in. We're up 100% from the bottoms of March 2020. Again, okay. I don't buy it. And we have a sell tail from November. That's still in play. So I just start there because, sometimes you can get lost in the weeds, but it's good to zoom out until this month ends and we close above 4,600. These bearish signals in my mind are still in play. If December closes above 4,450, that quarterly sell tail gets negated in my mind. Close above 4,608, the monthly one does. Well, really 4,620. Okay. So, but I still hold open the possibility that we close the month and the year at 4,400, right? Not too many people are there. Zooming back into today, we see we have a buy tail on the daily here. So the area below 46.25 got rejected. We didn't quite touch the 50. That's a little bit lower. Zooming in even more, we can see that we're kind of trending along this 200-hour moving average. So the sub 4630 area got rejected, but we are still below that important 4670 support line, which I have on these charts. And that to me is bearish. We're in a bearish wave, so we're in a bullish correction within a bearish wave. That's my, that's my sort of shorter term analysis of where we're at. So what am I looking for as far as a setup? Since I'm positioned as a seller, both because of my quarterly view, monthly view, and because of this short-term bearish wave down from 4730, I'm looking for a place to sell, right? I'm a seller. The 50-hour moving average is usually a good place to pay attention to. I don't think that's necessarily where the price stops today. Remember, we're in a strange day because of the FOMC. I think the 4670 line is going to be an interesting one. That could be a very good place to sell if we get up there, which I think we have a good shot at. And then this line will be decreasing by about half a point. This is the 100-hour moving average. This will be decreasing about half a point per hour. So by Powell press time, that will be pretty close to the 4670 resistance line. So I see this area of 4660 up through 4673 as an area where, people are going to start feeling pretty bullish, especially because the gamma will be more positive in that area, which should suppress volatility, right? So, but to me, that's a good sell zone. If we trade right up to 4670, I'd be happy to short right there. I'm looking for a 40-point intraday fall really pretty quickly, just because of my style as I've gone through yesterday. I like to get net zero in terms of premium as quickly as I can. So this is a trade that's either going to, pay off quickly, like within an hour, or it's going to bust. And it's a real binary trade just because of the nature of the day. So yeah, 46. I'm thinking 46.60 is probably about where the 50 will be when time comes along. They're up through 46.73. I guess there's this 46.86 level that was today's high. So that's kind of like the last gasp for the bear. That would be the last important resistance point. Let's talk just briefly again about this Santa Claus rally idea. So there's lots of talk about the size of the hedging that's coming off on Friday. Friday's going to be a quadwitching day. And there's something like $4 trillion in derivatives that's going to roll off on that day. And, the chatter is focused on, and this is coming from Goldman Sachs, but other places too, that as that derivative position comes off, the dealer flow will be unilaterally, well, not unilaterally, but will be largely positive because they will be basically buying back shorts that they mechanically had to put on to offset their hedges. Okay, fine. Basically, so the idea is that's bullish and will feed into a Santa Claus rally. That may be okay, but what that fails to mention is that there's also this 3-day window here where there's still a large potential for gamma-driven selling by dealers, and particularly if we break below the 46.15 level, because that's where gamma switches to negative, heavily negative, and dealers start having to sell into price falls. Okay, so I'm surprised at the level of bullish chatter here. One other thing I'm going to throw out there is just note that crude oil, if you've watched my channel, you know that I like the crude oil S&P spread and tracking that. The crude oil is below its 200-day moving average. Okay, so for the S&P to get below its 200-day moving average, it would have to be at 43.30. That's a long way down. So once again, in my mind, that's another mismatch. There's a mismatch there. And then finally, let's revisit individual stocks, the bellwethers. Apple. Last Thursday, I was very bearish. We're now back at that level again. This area above 175 has been rejected now once. I'm counting this as a rejection, so twice, and then again today, 3 times, okay? So that's not good, and Apple is 13% above its 50-day moving average, so there's a lot of air under this. And remember, this is the bellwether of the market. This is the bell of the bar. The bell of the ball. All right, so I remain bearish on Apple. Microsoft, why are these all switched to 1 year? So this is last Thursday, so we're down 2%, almost 2% from Thursday. Monday's sell tail there is looking bearish. We do have a buy tail on the daily and this sort of support at the 50-day. So this is a less bearish chart in my mind. Amazon is probably the most bearish of all of them. Note we failed to set a new high, to break the July high here in November. That's bearish. We're now flirting with the 200-day moving average. All of the what I call required retracements have been completed. And so, at this point, like Amazon could enter a bear market. I mean, that's a lot different than where Apple and Microsoft are. Apple and Microsoft, my argument would be that they're overbought and at a top. Amazon looks vulnerable to, entering a bear market. Amazon's down 3% from last Thursday. Bearish appearance. Google is down 2% from last Thursday. This had, an impressive buy bar below the 50-day moving average. So this one is the least bearish in terms of immediate performance. So for tomorrow, I would even count this as slightly bullish. in the immediate term. And finally, Tesla does not look good. There's a large put position. We've now broken below 1,000, closed below it again. We're below the 50-day moving average. We're down 4% from Thursday. So this is very bearish. Okay, so we've got 3: Apple, Amazon, Tesla, very bearish. Microsoft, neutral. Google, slightly bullish. But as a whole, these 5 are either look vulnerable or they're bearish. And they're down about 2% since last Thursday as like a little mini index, if you will, these 5 stocks. One mea culpa that I'll throw out there where I just got a call wrong is Facebook. This I thought looked like an absolutely amazing sell opportunity here last Thursday, and we're up 1% from that close, 1%, almost exactly 1%. We've also closed above that 5,200-day convergence twice. So this is a confused chart, I would now say. It does have this sell tail from yesterday, but I was wrong about an immediate sell-off and the bearishness of this chart last Thursday. So I'll throw that out there. But all in all, looking at these individual stocks confirms a bearish slant to me. All right, moving on to crude. Like I said already, we're below the 200-day moving average. It's falling off again relative to the S&P. Although I'm still bullish crude relative to the S&P, kind of on a conceptual basis, let's call it 2 to 3 weeks out. I don't think this is the time to be long crude. In fact, this to me has the appearance of prices wanting to fall and retest last week's low, which is $7 below the current price. I mean, there's a lot of air here, actually. If that happens, I think OPEC might have had a who me worry attitude back at the end of November at those levels. But that also means it gives them some, dry powder, basically the ability to jawbone the market higher anytime they choose. So I become an interested buyer if we get back down to this, below 65.50, basically. For now, I don't see a trade in crude. And lastly, natural gas. Natty. Okay, so switching over to the Interactive Brokers platform. And what we see here is, in my mind, clearance for a resumption of the bearish trend. Yesterday, we had this bearish reversal on large volume. I wasn't super excited about shorting yesterday, though, just because of the way that the market fundamentals were still lined up. The internals still seemed like they were overly bearish. That's now resolved. We had buying throughout the day today through the trading hour. And so actually we're now kind of like overbought. So even though we haven't moved anywhere positively in terms of price, okay, the heavy volume has been bullishly slanted and is now out of balance. So I would short that. And I would also short because of this bearish reversal. And then on the daily chart, just the inability to get above the 200-day moving average. Remember, usually when a market is this oversold, there will be a magnet up toward the 50-day moving average, but there are exceptions. This is one of them. Natural gas in December does not follow that rule. Okay, that is not that's a good rule that if you follow it, you go broke. So yeah, don't try to fade a move in natural gas in December. Is what I've found. So I think that enough of the imbalance that we had last week, in the previous week, in terms of being oversold, has worn off, and we are clear to get back to selling. So I am taking this trade, shorting natural gas. This is the first trade of the week for me. Buying a 460 put at 0.92 and we are currently at around that level. So, I mean, I just put it on. Do I mean 460? I mean 360. That was a typo. So 360, yeah, we're still right at that level. 360 put is currently at a 915. So we're within spinning distance of the entrance. And, you know, I would like to put a trade on tomorrow in the S&P, but as always, it has to be a really compelling entry. So we do have, you know, a clear impulsive move down. It would be nice to see a setup for some selling where I feel like I have a short-term extreme against that. What's the word I'm looking for? Thesis. Okay. That's what I always look for in terms of, that's what I often look for in terms of an entry. So there you have it. That's my view for the day. Like I said, it's going to be a big day. Obviously, the 2 to 2:30 p.m. time frame for the S&P will be the most important. That's in exactly 12 hours. So we'll see where we go. Once again, I'm pretty surprised that there isn't more bearish chatter out there, but I think that this thing ends the year weak. Is what I think is going to happen. So with that, have a great day. And yeah, the Fed announcement is at 2 p.m. tomorrow, and 2:30 is the Fed presser. So 2 p.m. EST is the announcement, and 2:30 p.m. is the presser. All right, cheers.